All right. Okay, Miss Rosa. Based on the last fib move, price pull back to the 38. So uh, for me personally, I always like to wait for price to if I'm not in the move, I always like to wait for price to get to at least the negative 27, right? At the moment. Based on the month, the weekly, the last swing, I would consider this my last swing, right? Because price hasn't, let me zoom in real quick at this part right here. And although we have price did close above like this last here. So yeah, and we have an institutional candle here. So I would be expecting price to pull back into this zone to keep buying up. We had this impulse move. So I would be expecting price to pull back somewhere in, let me go to the daily, then I can have a clearer vision. So we have this here, and let's go to the daily. All right, so now we have this imbalance here and this order block. So I would be expecting price to pull back somewhere in between into here, maybe pull back in somewhere into this order block. And I'm just going to mark it as my buy zone. Or demand zone. So I would be looking for price to pull back somewhere into this zone to keep buying up, to keep buying, okay? As of right now, this is the swing low. This is because price has broke above or closed above these highs here. This is my swing low. So price would have, for me, price would have to break this low. And let me rephrase that. This is my swing low. This is my swing low. This is my internal swing low. So internal. And I'm going to explain that in just a second. So that's my internal swing low. So price could, as you can see, there's liquidity right here. These two equal lows, right? And this demand zone hasn't been tapped into. So price could come back and tap into this demand zone right here or this demand zone right here. There's also a demand zone down here, but price would have to come back. Price would have to, or could come back, tap into this demand zone, and then continue buying. So what I mean by that, which makes this the swing low, and why this is the swing low and this is the internal, because now that price has broken these highs, this is my fib move. Okay. This is my fib move. So that means price can pull back anywhere in between the optimal trading entry, which is for me, y'all, and if you don't know by now, y'all know I'm the 78 girl, 78.6. I would want price to pull back into the 78.6 area before I look for a buy. So price can come anywhere in here for me to look for the buy. Okay. So again, price could pull back here and start pushing back up, or because it broke these highs, price could pull back to the 618 or the 78 and then start buying back up. So with that
Yeah, that's what I was looking at because I said it broke the high. And I say, so usually when it breaks that high, that could mean it's still trying to go up some more. Because I was trying to catch that. I said, I know it's coming down, but I noticed that it broke that high.
it's
That's why
definitely it's definitely still pushing up. That's for sure. So it's just a matter of when it pulls back. And you know, I'm always looking for my 3 pushes. So as price was pushing down here, and then we got 1 push up, we got a second push up, and then we got a third push up. So I'm always looking at the market maker cycle whenever I am considering a trade. So even if this pulls back to here, and sometimes it can be 4 pushes, or pull back here and come back up here. If it pulled back up here. So the thing is, for me, I need to see the fib play out. Although it gave me these 3 pushes, I need to see this fib play out before it comes back. So mind you, as this is pushing up, this is going up, right? Push, push, push,
yes.
push, push. So, so right now, this is where it is. I definitely need to see some pullback, and I do believe it will probably pull back here and push up one more time before pushing all the way back down to wherever the 78 is going to be.
Okay.
So I would definitely wait if I'm on the 1 hour. Yeah, it's still going to be the same because this price starts breaking these lows. Of course, if it breaks this internal low here, and you can possibly get in on the pullback, which for me, I always use the institutional candle, which is the last up candle before this down move. If it breaks this low, it has to break this low first. Because as of right now, for me, it's pulling back to this order block to either continue buying up or pulling back to this order block to maybe give a double top and then push back down to this zone here to then start buying up. I mean, there's so many scenarios that can happen, right?
Yeah.
But I would definitely want to see, let's go to the 15-minute. So as you can see, we have this 15-minute breakout structure or internal breakout structure. Let's say that. So this would be my, and you can use, since you have these 2 candles here, you can start with this one, or you can just use this one here as the institutional candle. This was the last up move before this break to the downside. So I would definitely be looking for price to come back up here. You can always wait for confirmation once it gets there to show you that it wants to start selling back down to this demand zone, back to this. I forgot what I just did with that. Hold on. Was that an imbalance or? Yeah, that was an imbalance. Hold on. Let me make that clear. Okay. So with that being said, on the 15-minute, we had an internal breakup structure. We have this imbalance here. So price may not come all the way back up there. If I know US 30, like I think I know US 30, Sometimes it will not come back up there. It may come to the 50% of the imbalance to then start dropping. Let's fib that move down. So that's 50%, 618. And then that was almost a 78. So price could just come up to this point right here. It is in the premium zone, or it at the one of the optimal trading entry zones, right? Anything 50% and above or below is your optimal trading entry. So once price, I would set an alert here, and then once price got here, of course, wait for price to show you what it wants to do, whether it is continue buying up to the top side to this institutional candle, or whether it's going to come here and start breaking structure to the downside. So, and then the negative 27 would be right here at this imbalance and demand zone. Let's see how many pips that is. So from the 50% zone, we're talking about 200 to the negative 27, about 200 some pips, 240 pips.
Yeah.
So, yep, I would definitely, now, Miss Rosa, are you, do you trade the back and forth, or do you just wait for?
No, I trade the back and forth.
Okay, so you're probably going to try to trade this up as well.
But see, because I was thinking, what scared me was it broke that high. So I'm saying, is it through buying? Because I was like, maybe next week it's gonna sell. And then I said, well, I need to know when I should get in for this sale, because it seemed like it's so high, but it's
Well,
like the old time high.
you have an internal breaker structure here. So I would you have an internal breaker structure here, right?
Yeah.
So I would definitely wait for price to, and I'm just going to the 5-minute just to, I would wait for price to either get a bullish, some kind of bullish momentum back above this zone. Because right now it's not giving the structure that I would be looking for. Let's go down to 1 minute. So for me, this would be the last swing right here. Right? So that means I would be looking for price to break this high to then wait for the pullback to get in for the buy. Unless price pushes down and breaks this low, then you can move your swing down a little more. But it would need to break this low in order for this to be the next swing. But until that, this is your swing that you're looking for price to break, because price can push up to here and then start selling back down.
Yeah.
So with that being said, although I'm saying once it breaks back above this zone, I don't think it's enough pips to hop in that buy. Well, anybody can make, 40 pips do something, right? Depending on the lot size you're using. So, but if it did break back above this zone, I would say you can take it up to at least 45 pips.
Okay.
Then you would have to wait to see if price is going to close above this swing. And then once if that happens, and then I'm going to also draw this demand zone right here. Okay, so if that happens, and I'll get back to this in just a second. If that happens, then you'll look for the impulse move, you'll look for the demand zone to pull back to, and then buy it up. Now, I said all that to now say there was a demand zone here on the 1 minute, right? So
Yeah.
if this is gonna meander back to this zone and not break this low, and you get an impulse move and a change of character from this zone, then I would say you can buy it from this zone up to this zone, which may give you a little more pips, like around 70, 75 pips.
Okay.
Mm-hmm. And then back to the same thing. You would wait to see if it breaks this high. And if it breaks that high, you'll look for your demand zone on the pullback, and then that could be your second entry for the buy up. At least to this zone here, which is like 137 pips for the first entry. The second entry might be something else. I don't know what it would be because I can't see it yet. You know what I'm saying? So
Yeah.
So yeah. So
Okay.
that's what I would be looking for US 30. We know it broke structure. So now we're just, because if you're going to buy it up, just wait for a break of a swing high, which currently this is the high. If this pulls back and doesn't break this low and then starts breaking structure to the top side, then you just look for the entry from there. Once it breaks this high, then you'll look for a demand zone back somewhere from here and then take that up as well. So that could be two entries for US 30 back up to this zone, a buy to sell. You know what I'm saying?
Yes.
Okay. So, and then I wouldn't just close it here. You can start trailing your stop based on the swings. Based on the swings, you can put your stops, especially once it breaks here, pulls back, and then pushes up, then you can put your stop loss based on the swings that are created once it starts pushing up. So once it comes back and then push up, you can start putting your stop losses below these lows.
Okay.
Okay. And if it keeps going, hey, it might just keep going all the way to, up here. But as it keeps going, you can just keep moving your stop below the swings.
All right. Thank you.
You're welcome. You're welcome. And how is everyone's trading week? Any questions on any pairs? Do we need to go over the weekly order blocks for the week?
Yes, because I like to do a US 30 and a pair.
And a pair. What pair was I looking at that was, let's see, weekly. Okay, so these are the weekly order blocks that Ish put out last week. And as we can see for GCAD, price pulled back to this key level and then started pushing up. So let's see. Price is currently like 50, 60, maybe. Ooh, maybe 175 pips, depending on what it wants to do. So if we look at the overall structure, this is our last swing, and I'm looking at higher time frames, y'all, because the higher time frame dictates the lower time frame, right? So price has pulled back so far to the um, 78. Maybe it'll go to the 88. Maybe it'll break above and start breaking the highs. But right now it is moving into a key level. So, and like I said, maybe it'll go to the 88.
Kim, your key level, that one that you just pointed to, is that a daily key level or a weekly key level?
So who said that?
Kalechi.
Oh, okay. Kalechi, you know the answer to that. You know the answer to that.
It looks like a weekly.
So it is.
Oh, okay. I just wanted to make
so just for those who are not familiar with it, if you drop a key level on a weekly, it is automatically a key level on the daily, on the anytime lower than the weekly. Let me just say that. But however, if you draw up a key level on a 4-hour, it doesn't automatically equate to a key level on a time that's higher. Does that make sense?
Yeah, that makes sense.
Yeah. So yeah, this was a weekly key level. And so of course now it is a key level on the daily and everything below. So price will definitely get here and do some kind of, because it is on a higher time frame, it may just stick around for, as you can see, like when price got here, it stuck around for 1 week, 2 weeks. It came down a little bit, came back up the third week. Oh, I'm sorry. This is on the daily. 1 day, 2 day, push down, then push back up, 3 day, 4 day, 5 day. So it stuck around for a few days because of the higher time frame. It will meander for days, maybe even weeks. Let's see how many weeks that was. So this one meandered for about 2 weeks. The first week it pushed up. The second week, it pushed up and then pushed down. So, and of course, to get in on this here, you have to be on a lower time frame. So if we talk about the 4-hour, we can look and see if we could have gotten in on the 4-hour. Absolutely. So for anyone who does not want to, sit on the chart, watch the chart, just kind of periodically check the chart, which I think everybody should do, instead of sitting on the chart. Right here, you have your last swing. So this was the last 4-hour swing, right? So that means price would have to break this low here. And I don't, and let me just say that. So price would have to break this low, not the internals, not the internal swings, but it has to break the external swing, right? Because price could have easily come back to this demand zone and started buying back up. So see how this tapped into it? This could have easily started buying up. So price has to break the external swing, and how I figure my swing is this was the high, price broke here. So everything below from here on down is my swing. So I just make that whole thing my swing. And then once price broke this swing, right, you can either fib the move, or you can look for the institutional candle. You can look for the imbalance. You can look for, or you can just look for the fib to come back to an optimal trading entry. Okay, so price pushed back up to this right here would have been my institutional candle, because it went all the way up. This was a bullish candle, but it wasn't the high of the move. So this would have been my institutional candle right here. And I'm just going to mark that up as my institutional candle. Okay, so that would have been my institutional candle right here. So you can either wait for price to get there, you can either set a limit, you can either set now I don't know how many pips that would have been. That would have been too many pips for me to try to cover. So I definitely would have waited for price to get here. And then you had this, now I am not a pattern candle person, right? But this gave a, what is it called? Anybody? Evening star? Is it an evening star? I think so. So, and if you don't do patterns like I did, like me, if you don't do patterns, this came, and let's just go down to the 1 hour, the 15-minute. Where was I? Where was I? Let me go back. Okay, there we go. Okay, now I have to find it on the 1 hour. Hold on. Hold it. Hopefully, okay, there we go. I think. Oh, no, it didn't do it. Okay. All right, let's then go back to, see if it's on the 2 hour. Okay, it gave it to me on the 2 hour. So based on the 2 hour, price came up to an optimal trade and entry. We're back to that institutional candle, right? Gave you a bearish order block. gave you another break of these lows here. I'm just gonna zoom in. Okay. Gave you this bearish order block, gave you a break of this low, and this low. So you could have used this imbalance as your entry, or when I was on the 4-hour, there was something else there but I don't want to move it. So you could have entered at this imbalance. The order block has already been mitigated, so I wouldn't have looked at that. This was the institutional candle. This was the high, the high of the candle before this move. Because it was already mitigated right here by this candle, once this candle started breaking these lows, then you can look for the order block or the imbalance or the fair value gap. So this would have been the entry here. And if I'm not mistaken, this, y'all know Todd is the consequent. It didn't tap the consequent encroachment. So, however, you could have, based on, what's his name? ICT, you put your entry at the opening of the fair value gap. And then your stop loss above the high. Now, again, this is a currency pair. 47 pips is a lot for me. But you can still do it. I say just make sure your lot size compensates for the pip stop. The number, your stop loss, sorry. Make sure your lot size compensates for your stop loss size. So if you know you're putting $1, you know that you're going to be out $47 if this stop loss is hit. Okay. If you're putting $2, you know you're going to be out what, $94 if this stop loss is hit. So make sure you calculate for how much you're planning to lose. Okay, so now we can go back to the 4-hour and where were we? Okay, so now that we know that price broke our structure, so you can at least take it down to this low, 479 pips, because that's the last low that was created or after structure was broken. Okay, or you can take it to the negative 27, or if you know how I look at the fib, if price pulls back to the 50% 618, price is likely going to the negative 618. Or you can just look at the or you can just look at the next demand zone to take your profit. You can just take it there. And that would have been 310 pips. Or if you're feeling a little risque, you can take it to this. There's an imbalance order block and an order block here. You can take it there. So with that being said, let's see, 1 push, 2 push, 3 push. So yeah, again, I look for the market maker cycles, which is the 3 pushes. So soon as I would have seen the 3rd push happening, which is the 1 push, this was the 2 push, and this was the 3 push, I definitely would have taken my money and then watched to see what price was going to do after that. And as you can see, it went down again, came and gave double bottoms, and then pushed up. And then pushed down again. Okay. So with that being said, wait for price. I mean, I know most people don't drop the key levels, but my point was for um for this where price is currently. Okay. Where price is currently. Just a second. Okay. Once price got here, I would be looking for the exact same thing. Is it going to break some kind of or some level of structure? So we have 1 push here, we have 2 push here. I would be looking for a 3rd push, maybe a little small 4th push. Maybe price will break that low to pull back to then start selling back down. So, or is it going to push, pull back, and then keep pushing? We don't know. Of course, if I'm looking at the higher time frame, if I'm looking at the higher time frame, I would be looking for price that has already tapped. I would be looking for price to come up to somewhere up in here. Okay. And that's a monthly imbalance. But again, price could come up here. Price could push back down here to this imbalance and or institutional candle, which is right there. I think it all depends on what the currency is doing.
This is like a long-term perspective here.
But based on that long term, you can trade the short term. Okay. So we have a demand zone. We have imbalance and a demand zone here. So I would be expecting price to pull back somewhere in here to keep buying to my zone. And again, it may not come back to the demand zone, but it is likely that it will come back to the imbalance. But it could come back to the demand. You never know, right? You just don't know until price shows you what it wants to do. And I'm just going to mark up these 2 because since the 2 red candles are here, that will be considered both candles. So price could pull back here or pull back in here and start buying back up. So yes, you have to look at the higher time frame to know where you're going and then go down to the smaller time frame to see where you can possibly get in. I'm unlike Miss Rosa, and I know a few other people. I don't buy the pull. I don't trade the pullback. I wait for price to come back to one of these zones and then show me what it wants to do. I would prefer it come down to this zone here and then show me some change of character to trade it. So it may be a few days before price pulls back to this zone for me to get in to then buy it up. But my bias is for a buy for GCAD. And as you can see, on today ended as to the last 4-hour candle for today ended with an imbalance, right? It ended with imbalance, and this is why I don't trade the pullback. So you have an imbalance here. You have an imbalance here, and then you have this imbalance in demand zone here. So why I say I don't trade the imbalance because or the pullbacks, because you don't know how far price is really gonna pull back until it's pulled back. So I'd rather wait for price to come to me, whether it's in this zone, and let's fib this right now. Because as of right now, this is where price is. So I'd rather price to pull back to one of my optimal trading entries, whether it's the 50%, the 618. For me, I'm all day, every day, 78. Like if it pulls back to the 78, I'm gonna set my alert at the 78, okay? Because that's where I want to get in. For the pullbacks to the 50% and maybe even the 618. The 618, I can do the 618 too, but I would rather for price to pull back to the 78. And as you can see, there's really no pullback right here at the end of the day. So price is probably gonna open on Sunday, probably push up some. And then start pulling back. So then, of course, your fib will start moving up depending on how far it goes before it starts pulling back. And again, price can come to the 23, price can come to the 38, and then start pushing back up to, for me, I would be looking for the 618 based on what I've learned about the fib. The 23.6 or the 38 usually is going to go to the 618. But you can always stop it at the negative 27. See what price, see what it's going to give you, see what's going to happen. But I would definitely be taking it to the negative 618. So, so that's what I see for GCAD. Bullish. I see it bullish. For GU, same thing. Daily, weekly. GU, same thing. I would just mark up this key level here. Of course, this is the same on the daily, right? It's the same.
Kim, you don't go too far back like most people do for their
no, because
support and resistance.
no, because this right here was especially on a higher time frame. I know that this was a strong level where it came up, pushed and reacted, it stopped, and then forcefully pushed all the way down. So no, I just need to see and you can so that so that you can make sure that you're at a strong level. But usually for me, and see right there, I have to squint my eyes. There we go. So yeah, that would be my zone right there. So or if you wish to bring it down. I just like to look for, yeah. So that would be it. That's good enough. I got 1, 2, 1, 2, 3. Long as I had 3 touches, 4, 5, 6, 7. Yeah. So long as I have a minimum of 3 touches, this could be the zone. However, this is still a swing high, right? This is currently a swing high. So that's why I did that markup there. But price may not go up there. Price may react next week to okay, so now that it's in this zone, I look for my last swing. This is my last 4-hour swing, right? So, and then it's above my zone. So I'm expecting price to pull back and then continue buying up. However, if price breaks that low, and usually I like to see it break several lows, but if price breaks this low, I will be looking to see if price is going to pull back to here and then continue selling, because you know it could break this low, right? Pull back to here and then still buy, and could continue buying. So that is why you want to wait for price to pull back into this zone and then give you some kind of structure that it's going to continue selling to the downside, meaning price push back in here, maybe push back up to here, and then broke another swing low, and then that's when you know it's going to the downside. And I say that like for GCAD, the trade for GCAD, let's see, this week. You see how price pushed below here? And when it pulled back in, let's go to the 4-hour. So once price broke this low, okay. Once price broke that low, it was still in my zone, and I always like to see price push out and then pull back before I make a decision. But as you can see, it broke this low, this swing low here, and then it came back in here and gave bullish momentum. So pretty much all price did was it broke this high, right? And then came back and retested some of these breaks or break some of these highs. Let me just say that. It came back and retested these highs. So although it broke a level of structure, you still have to be patient to see price push out, pull back, break, or give you an internal shock or change of character to then start selling back down. Because if you don't, price could do just what it did and break out and then push back in and then start buying back up. Because there was nothing in here after this break, there was nothing in here to show that it wasn't breaking any of this. One, it didn't break this low. You would have needed to see this low broken, some momentum. You see, it gave an impulse move, but it did not break this low. This low. So because you didn't see that, and then it gave an impulse move to the top side, then that was the sign. That would have been a sign for me that price is going back up to the top side. And maybe it would have come here and then drop, but as you can see, based on the just the 4-hour candle, price pushed through this zone here. The next 4-hour candle gave a bullish. The next 4-hour candle gave a bullish and broke structure. Broke this swing right here. Oops. Wrong thing. Oops. Oops. Cancel. Sorry. Broke this swing right here. So you have to wait for confirmation. As this was pushed, as this broke and pushed back a little and pushed back a little, you needed to see the break, impulse move, an order block, a fair value gap that broke structure. This right here was just inducement. It gave you a bearish order block. It gave you a fair value gap. But guess what it didn't give you? It did not give you a break of structure. And I am not a fan of body closing below a body. For me, the body has to close below the wick. That is the whole purpose of, if you read the Candlestick Bible, if you read the Candlestick Bible, and I'm just going to do one. The Candlestick Bible tells you this is the open, this is the close, this is the high, and this is the low for a reason. Low, once the low has been the candle has closed below there, closed below the low, then you got some action. If price wicks, to me, that's just a sweep for a continuation of a buy. And if y'all ever want to go over Candlestick Bible, holla at me. Holla at me. Okay? So. Oh, somebody asked a question. Oh, hey, Kai. So yes, so now I am seeing GCAD again going up to what, 78, 78,000, 1.78. I'm just gonna say 1.78. And then maybe you'll get the sell that you're possibly looking for, or it might even go up some more. You don't know. I can't say. I'm not gonna say that it's gonna sell from 78, 100. All I can say is that I would be looking for a buy up to that zone. And then once it gets there, you can wait to see what the market gives you at this point. Could it sell up to 1.7900? Yep. And then start selling and come back into the zone and then start selling. Yep, it can do that. So just wait for price to show you what it wants to do. GU, same thing. I think we just went over that. NAS, I fib. Oh, that was for US 30 for Miss Rosa, sorry. So if I fib the last move, the last swing, right? Price broke here, and then you have these internal swings. And price pulled back to the 23.6. So again, I'm expecting price to, it tapped the negative 27. It pulled back. Here is this would be a key level for me. That's a 4-hour key level, but let's look and see what it's looking like on the daily. Same thing, right? So this is my daily key level right here. Price came here, reacted. So I would be expecting price to pull back to this zone. There's a demand zone right here. There's an institutional candle right here. Okay, so I would be expecting price to push back into this zone and continue buying up to probably this negative 618. So, and I don't use the squiggly lines, but I use my trend line, right? So price could push back even down into this imbalance. It could push down into that imbalance. It could close the imbalance. But then once it gets to my trend line, I'm expecting price to push back up and then keep buying back up. So that's based on the daily. So now on the 4-hour, let's see what that looks like. You have a demand zone here. All these red candles right here. Doop. So price could push back into here and then start buying back up. Price would have to close below this low. Okay, price would have to close below this low before I start looking for nothing but sales. Now, that's not to say you can't sell this down, because if price comes up here, because it broke this low here, right? If price comes back up here, and you see it's at the 618, right? So what am I expecting? I'm expecting price to sell down to the 618. That's kind of confluence for me. But I need to go down to a smaller time frame. And as you can see, price broke internal structure on smaller time frame. So I would be looking for price to come back to this institutional candle to then start selling down to these. Let me move this out of the way. To this zone here. And then maybe it'll pull back and then sell down to this zone here. So the confirmation that I would have been looking for, which is this internal change of character. So if I go to the 15, you can see it even clear, right? It tapped the 618. It tapped the 618. Gave me a change of character here. So now I'm looking for price to pull back to somewhere in, which is, this is 50% of that imbalance. And I don't need the imbalance box to see it, but I can see it, that it is, there it is, 50% of this imbalance which was also my 4-hour institutional candle, or when am I tripping? Or 1 hour institutional, 1 hour institutional candle. Okay. To then look for a sell. So you can set, this is NAS, it's 75 pips. For indices, I generally like for my stop loss to be no more than 50 pips. And for currency pairs, no more than 20 pips. But again, make sure your lot size and your stop loss are in alignment with each other. With how much make sure it's in alignment with how much you're willing to lose. Okay. So I would be looking for price to come up here and then continue selling. If you want to target these lows first, that's 255 pips. If you want to target the fib move, which is at the negative 27, that is 442 pips. And then if you want to target to the negative 618, now of course this is going to be, well, this is an indice, so it may move pretty quick, but this may be a day or 2 or 3 or 4 or 5, or maybe a week, to the negative 618. Now, if it had not given this change of character right here, then we'd be looking for price to push up to fill this imbalance. But it pulled up to the 618, gave another change of character. So now we're looking for the sell. Any questions on that? Was that a no? Okay. So now back to or we're at NZD Chef. Okay. So higher time frame. This is our break of structure. So if you want to fib that move, that makes this our swing high, right? And this our swing low. Okay. But within that, you have internal breaks of structure. You have the internal moves. So you have a break here. You have a break here. And I can just tell from here, I can look here and tell on a lower time frame. That's a break. So this would be your swing high. That was broken. Price pulled back, gave you a double bottom, right? And that's actually a major key level here. Okay, so price broke structure, pull back, and now it's breaking structure again. Okay, we're on the higher time frame. So once price pulled back into this demand zone, it broke this high. So the next zone would be from this demand zone, this last candle. So price, we should be looking for price to push back up some more. And the target would be either this supply zone here, or this imbalance here, which you have relative equal highs or liquidity right here. So the target would be here. So this is our last swing, current swing. Price has pulled back. Could it pull back some more, like to these wicks? Yep, it could. As long as it doesn't break this low. And then you can just target the high. Look for break of structure. Wait for price to pull back again. Just the cycle continues. So that would be my target. For where price is currently from where price is right now. Like I said, price could pull back to this zone without breaking that low. And then keep buying, as long as it doesn't break the low. NZD-JPY, same thing. Let's see. NZD-JPY has swept this high, right? Oh, does somebody have a question? Preach the gospel of foreign exchange. Andrew, you the GCAD pastor. The GA and the GC and the GU pastor. So, as you can see, price swept this high. This was all-time high at one point, right? And now it has created another all-time high. And let me tell you that I've learned this trick from, oh shoot, it's gone. Hold on. I learned this trick from Andrew yesterday. Or on Wednesday. So the all-time high was 99,022. So as you can see, price based on the weekly, you had a rally, you had a base, and you had a rally. So price has pulled back to that zone. This is the swing low. Okay. This was the break of structure. Okay, so price has pulled back. Now, I know a lot of people get, they will see a bearish order block or pullback and think that price is automatically selling, right? And it could be. However, as you can see, you have your swing here. This is your swing. Price pulled back into this zone. So yes, price could push up and then push back down to this zone. As long as these lows are not broken or violated or whatever you want to call it, right? As long as this low is not broken, and as you can see, let's fib that move. Let's fib the swing. Okay. Price has pretty much tapped into the negative, I mean the 78.6. And then rejected. That was today. Now, price could push back down to this zone, which is the 88, and then start giving you internal breaks of structure without breaking this low. However, if price pushes back down, does not break this low, gives you an internal change of character, then you know you're taking this back up to these highs if it does not break this low. If it breaks the low, okay, gives you internal change of character, 9 times out of 10, you're taking price back up to somewhere up in here to then turn around and start selling back down. Because it broke a swing. But if it doesn't break the swing, then you want to buy it all the way up. If it breaks the swing, then you know this fib will then turn into this fib. So then you'll be looking to take your price up to your 78, 618, 78. If you're trading price action, the wicks mean something, right? So you can take it back up to here. You can take it back up to here. This order block has already been tapped into, so I wouldn't even be looking to take it up to there at this point. But from here to here is 230 pips. If it goes to the 78, it's 249.50 pips. If it goes to the next wick, it is 59.60 pips. So, of course, once price gets to one of these zones, you then look for an internal change of character to then start selling it back to this low, this negative 27, or this negative 618. But
Can you go to the monthly time frame?
go to the monthly, sure. Hold on, let me delete this stuff. Then go to the monthly.
And 2 weeks?
2 weeks. So this ended the 2-week candle. So it gave you a slightly bearish order block, right? You had this break here. And then you have these equal lows here. Okay, so based on the 2 weeks, let's go to the weekly. And remember, I had this marked up as our swing low here. Price is likely going to push up somewhere. It's going to be either to this candle, to this wick, or to this wick, to then come take out these equal lows, grab this liquidity, and then possibly start buying back up. Same scenario. If price pushes up and then comes grab this liquidity, does not take out these lows, does not close below these lows. If you get a sweep and then a buyback up into here, then it's likely that you're going to continue buying to the top side.
I mean, it can also like break below the low and use this fair value gap right here
Absolutely. So
and push the market all the way again.
So if it breaks below these lows, there's a fair value gap here. But because I marked this up, this is my key level on the weekly. This fair value gap, I would expect price to push into there, possibly push back to this zone to then start selling. Now, it could happen that way, or it could not. But again, once it pulled into this fair value gap, right? Once it pulled into this fair value gap that Andrew was talking about, once price starts pushing back up, you have to wait for price to show you what it wants to do. If it pushes back up here and then starts giving you a change of character in that zone, then you're looking to continue selling to these lows. This low here and or maybe these lows here, but I don't see anything price needs to. So yeah, the next zone to trade to would be this zone here. And of course, there is liquidity all up in here, right? There's liquidity all up in here. So, again, once it got here, it would have to close below this low. And let me just, it would have to close below this low for me to say, okay, it's closing below, it's coming to grab all of this liquidity. And my target would be, of course, you got to wait for price to pull back. The target at the moment would be right here, because price never pulled back. Once this impulse move happened, price never pulled back. There's some imbalance in here. Price never came back to mitigate this area right here. So if price broke here, then I would be looking for a pullback to then sell down to here. Everything else has been mitigated. This demand zone has been mitigated. This demand zone has been mitigated. This demand zone has been mitigated. Everything has been mitigated except for, and I'm saying this demand zone because of all the red candles. If there was a green candle, a drop rally, whatever it's called, then that one hiccup in there would be where I would be looking for the demand zone. But because all these candles are red, and of course you can go down to time frame to figure it out, right? If you went down in the time frame, there's probably something in these wicks or something in this wicks, or maybe I would just take it down to here. That would be my goal. And what I'm always looking for when I'm taking price is, you see right here, liquidity. These equal lows. Price is coming if and or when price breaks this low, it's going to pull back and come grab that liquidity. So that would be my target. And if you're trading quarter levels, this is 79, 250. This will be a minor quarter level. 79, 250, or I would just say round it up to 250. But definitely it would have to break this low here. So if price comes up here and does not break that low, then you might want to look for a continuation of buys. But let's get past this low first, okay? Let's work this low first. Because again, price could come wick and then push all the way up. One low at a time, one low at a time. All right, SPX. We talked about that one. Did we talk about that one? Yeah. No? Yeah. Can't remember. I think we did. Same thing. Because SPX is at an all-time high, Um, I would mark up my key level, which would be right here. Okay. So, the daily key level, the daily high was swept and then rejected. So let's go down to the 4-hour. There may be some. So that swept the low. Let me go down to the 1-hour, to the 15-minute. Even on the 15-minute, there is no closed candle. So even on the 5-minute, there was no closed candle. Even on the 1-minute, there was no closed candle. So for me, this was a liquidity sweep, then a push up, and as you can see, it swept the high. And I'm gonna do the same thing I just did on, there was a close above on the 5-minute. So in my mind, price is coming to this, possibly this demand zone, to possibly continue buying. Again, I don't know. We don't know. All I know is once price got to this area, all I know is price, there was a change of character here. There was a break of structure here, and then a change of character here. So I'm looking for a pullback to then sell down to this demand zone. What happens here is what will tell me the story of where I'm going, whether I'm going up, or whether I'm buying, or whether I'm waiting for price to take out this low to then possibly start selling down to that zone, to this zone. But again, I have to wait for price to show me what it wants to do right here. All right, for silver. Silver. Silver gave a bullish order block. It is above this key level. Gave a pullback still on top of the key level. So this may be a rally-based rally. As you can see, this was the swing. It pulled back to the 618. So I have the -27 marked up and the -618. So I would be looking for price to buy up to these levels. And I think the same thing for gold. Yeah. So I would be looking for gold to buy up to the -27 or the -618. Of course, the -27 is close to the next quarter level, which is 2,500. So. And based on the weekly, there's a weekly imbalance. Price has already pulled back to the institutional candle, which was the last down candle before this up move. So I would like to see price break this high first before pulling back to this imbalance. Pulling back here and then continuing to buy to the -27. and or the 618. So that's what I see for gold. That weekly imbalance is also a daily imbalance and a daily demand zone. And when I say demand zone, guys, I mean order block. That's the so yeah, price could pull back there and then start buying again. UJ was a weekly. This is on the weekly. I think this was a 2-week order block last week. It was a tied order block. Okay. So price pushed up, broke this high and pulled back to the order block. So I would be possibly, it hasn't broken any lows. So this to me is just a pullback or continuation of a buy. This could be a rally-based rally based on the 4-hour. This could definitely pull back to could pull back to the 78 or to even the 88. This is the institutional candle. Or it could just pull back to maybe the 50%, 618. I would like to see it come to the 78 or the 88 to then buy up, continue buying. But you got 1 move, 2 move, maybe a 3rd push down to here somewhere to continue buying. Long as it does not break the swing. And you had this push up, this pull back, and this push up. So that would be my swing low. That's for UJ. And then that's all I have. Anybody want to look at a pair? Anybody? Going once, going twice. Oil is about to drop. Andrew,
Yes, ma'am.
was it you that mentioned something about oil?
No, I don't trade oil.
Somebody said something about some oil news. And I wasn't sure about it. Well, if you're a trader of oil, I would be waiting for a price pulled up to this supply zone, tapped it, and then started dropping. I would be looking for it to either close below here or come here, give a double bottom, and then continue buying up. 2. And I personally think oil is going to, was it 103 or something? I think oil is going up to, yeah, 104. That's my guess for now. That's all I have. Anybody want to see anything else? If not, then that is today's Friday beginner back testing session.
Thank you for your time.
Thank you. I'm glad you recorded.
Thank you.
Thank you.
See you all tomorrow.
Okay.
All right.
See ya.
Thanks, Kim.
You're welcome. Bye.